Okay, all right, we can start now. Okay, as we're on Sunday today, we're gonna hold our weekly webinar. We're gonna make our analysis on the major pairs. We're not gonna have time to go through all of the pairs that you guys are going to suggest. So I'll just go through all of the major pairs. Okay. So we're gonna start with Euro USD. Let me hide this. Okay, we're gonna start with Euro USD, which is the most traded pair. So we're gonna do a top-down analysis. But if you are a member of a Smart Premium, you should know that we're not going to make our analysis on every time frame. Okay, we don't use every time frames here. We only use main time frame like daily, H1, and M15. Okay, so we're gonna start our analysis on daily time frame. Okay, so what do we have in daily time frame? So here we are in our daily time frame. Okay, we see that Euro USD is almost moving sideways since the beginning of the previous year, since 2023. Euro USD is almost moving sideways, and it didn't succeed to break this support level here. This one here is a major support level here. The market has reacted on it for the first time, second time, and the third time. Okay, and now the market is probably on its way down to to react on this level again. Okay, so and if you look above here, the market never succeed to make a new higher high here. Okay, we're gonna use price action before we come down to SMC. Okay, so you see here that the market has never succeeded to break this level. And you see that the market keeps making lower highs here, okay? In this small time frame here, the market keeps making lower lows here and lower highs here. Okay, the market never succeed to create any higher high here. That means Euro USD is essentially a bearish during these last moments. Euro USD is really bearish over here, okay? And here we have something else like a channel here. Sorry. This is like a descending channel that Euro USD has been trapped in. Okay. This is like our descending channel, which is right here. Okay. So definitely Euro USD is very bearish currently. Okay. So I expect the price to push downside and bounce on this level of support. Okay. And this one here is a confluence. Okay. There are two levels of support that confluence here. First one is this level of support here, and the second one is this support from this channel here. Okay. So I expect Euro USD to come down and probably bounce on this level of support like this. Okay, so Euro USD will probably a drop will probably be bearish in the coming days or coming weeks. Okay, and moreover, there is no obstacle here that can possibly make the market to react over here. There is no order block, valid order block, or unmitigated order block over here. So the market is completely free to drop as far as this one. Okay, there is no obstacle here. So the market will probably break this structure to mitigate these supports and then push a little bit higher. Okay, so that's why I think Euro USD will probably be bearish during this week. Okay, now let's come back to SMC. Now let's come back to SMC and we're gonna start with our structure mapping. So we see essentially that behind here, the market was pretty bullish here, okay? So this is our lowest point here. The market take out inducement behind here. And this is our break of structure. This is our break of structure. And here we have our latest change of character. That means this one is the beginning of our of our current bullish trend, okay? So the market was bearish. You see that this was an inducement. The market take it out, break the structure again, drop, and then this is another inducement. The market breaks the structure and drop again. Okay, so this is our change of character. The market has shifted from bearish to bullish now. So we should start looking for buy opportunities only. Okay, and if you see here, the market didn't take out any inducement here. So this one is not a valid break of structure until here the market take another inducement here. Then this our last high is a valid high. Okay, this inducement was taken, and then here, this is our breakup structure. Okay, so that means we are in our bullish trend. After this breakup structure, again, the market dropped to take out inducement here. This one is our inducement. And high above here is another breakup structure. Okay. So this is our breakup structure here. And then the market dropped downside here to completely change character. Okay. So this one was our last valid higher low, and the market has dropped to completely break it and close below it. So that means this is a valid change of character. So from now on, we should start looking for sell opportunities only, okay? Because the market has shifted structure now. So where was our first inducement? Here. This one was our first inducement, okay? And here we have our valid decisional order block, or our first order block after breakup structure, okay? And the market did react on it, give a small reaction here, and finally fell, and the market pushed higher again, okay? So after the decisional order block failed, then we have to wait for the market to swipe its structure or to mitigate our extreme order block, which is high above here. So this candle here is our valid extreme order block. But as you can see, let me zoom close in. As you can see, there is no proper imbalance here, okay? This candle has already mitigated this this wick here, so we cannot use it as our valid extreme order block. So we have to transfer to the next candle, which has available imbalance, okay? So this one here has a proper imbalance here. The market didn't mitigate it. So this one here is our valid extreme order block, okay? So here the market pushed very close to our extreme order block, but didn't mitigate it, and the market completely dropped to the downside. Okay, here if the market has taken out any liquidity, any structural liquidity here, we could have taken a sell here based on this single candle order block. But you see over here that the market didn't clear any liquidity here. Okay, if you take a closer look, the market didn't clear any liquidity here, so we cannot take a sell based on this single candle order block. But this one here was a valid single candle order block with a proper imbalance here, but the market didn't actually take out any valid liquidity, so we cannot use it as our single candle order block. Okay, so after that, the market has completely dropped here and start our descending channel here. This is a channel that the market was trapped in, and the market keeps doing lower lows and lower highs. That means the market is definitely pushing downside to mitigate this support level here. Okay, and over here, this level, maybe the market may potentially make a small reaction on this shadow here because it has taken out this previous candle low here. Okay, so the market will probably make a small reaction on this one. It will depend on what the market will do during this week. Okay, so if you take a closer look, this one here is our lowest point in the previous week. Let me use this indicator so that you can see it clearly. Okay, you see this little dashed line here is our lowest point during the previous week. Okay, so this is like an area of liquidity. Okay, the lowest in the previous week low is our area of liquidity. So if the market push downside and sweep it, mitigate this small shadow here in daily, then we can possibly take a short-term buy here. Okay, until the market maybe create another single kind of order block above, then it will drop again. Okay, so this is a possible scenario. The market may react from this small shadow here because there is liquidity available here, and this one is our valid swipe of liquidity. Okay, so this is a possible scenario. Okay, but if this shadow fails, then the market will definitely push downside to break it, retest, and definitely going downside to mitigate our support level down here. Okay, so this is the possible scenario we can have on Euro USD in daily time frame. Okay, so here it is. We're essentially bearish in Euro USD. So now we're gonna drop to our main time frame, which is H1, so that we can see what's really going on in H1. So in H1 here, there is nothing special going on here. Our structure is still valid. The setup that I've shared with you the last week is still running. The market has not yet broken our lower low. So there is no new structure here. So on the previous week, I've shared this setup with you. This is an inducement. This is an order block is high above here. Okay. And here was our previous change of character. This one here was our inducement. Here we have a break of structure. Okay, so I was saying that the market pushed higher to break our last lower high here. So this was a change of character. And again, the market dropped and completely broke our lower low here. So this is a new change of character again. So the market has again shifted from bullish to bearish. So this was our latest inducement here. Okay. And after that, our decisional order block failed here. And we have got this trade here based on this shadow here. The market has mitigated our shadow here and give us this beautiful reaction from here because the market has swiped liquidity here. And I expected the market to drop after mitigating our shadow here, and the market did mitigate our shadow and drop sharply here. And we have actually taken this trade in our premium community. Okay. So this was the trade here. And down below here, we will have our break of structure, but the market has not yet hit our take profit. So here, this one is our break of structure. Okay, so this structure is still valid. There is nothing new around here. So we just have to wait for the market to break this structure, and then we can wait for another structure or another setup. Then we can take another trade. Okay. And here, as I told you when I was making our analysis in daily, you see that this one here is our previous week low, which is here. So it acts like liquidity. So if the market maybe swipe it and mitigate this shadow from daily time frame, then we can definitely take a short time buy here until the market take out inducement. Our safe take profit will be our nearest inducement. Okay, because the market is bearish. So after taking inducement, the market may shift to continue its bearish trend here. Okay, so this will be just a short-term reaction. Okay, so this is the structure that we can possibly have in Euro USD. This is the possible scenario for Euro USD for the coming days and weeks. Okay. Okay, if you don't have any question, we're gonna move on to our next pair because we won't have enough time to cover all of the pairs. Okay, so we're gonna do it quickly. So now we're gonna make our analysis on gold. Okay, so here we are on gold. So on gold as well, we're gonna start with our daily analysis. Okay, so on daily here, we see that everything is bullish here. Let me see if there is. Okay. On gold, we see that everything is bullish here. Okay, nothing else to say. Everything is bullish here, so it will be a little bit easy for us to mark our structure here. And this moves here was fueled by the political tensions in the Middle East back in April and March. Okay, that's why gold was really bullish over here. But now the tension is a little bit easing in the Middle East, so gold is moving a little bit sideways over here. Okay, so the first thing we need to identify here. Okay, so here we see that the market has swept our previous high, which is here. And after swiping our previous high, then the market dropped sharply here, okay, because the market has taken a huge amount of liquidity here and the market has dropped really sharp here, okay. And this one here was our latest inducement. This one here is our latest inducement here. So after swiping this high here, our high is transferred from this one to this new one here. So the market need to push higher and completely break above this level to be a valid break of structure. Okay. So here we have our structure in daily, and if you look down here, you see that everything is still bullish. There is nothing else we can do. Okay. just follow the bullish trend. You see here, market take out this small inducement. Let me zoom close in so that you can see it clearly. So this one here is our inducement, our valid inducement, and the market take it. Our valid inducement, and then market pushed higher to completely break and close above it. So we are in a good bearish bullish structure here. Over here we see a single candle order block in a daily single candle order block, but the market has already mitigated many times, so we cannot take a buy based on this single candle order block. Okay, this candle here has swiped this previous candle low, so this is so here we have this single candle order block here that the market may possibly react on. And but this order block, this single candle order block was mitigated many times, so we cannot take a buy based on this one. Okay, so this is the only structure that we can have in daily. So now we have to switch to H1 to see what's going on in our H1. Okay, so in H1 I have also shared my setup with you the last week. Okay, there is nothing, there is no structure, there is no new structure over here. So we see here, this was like our single leg move. This is our single leg move. Why? Because the market didn't take out any inducement over here. So this is our single leg move until the market take out this inducement over here. Okay, so let me get rid of this one, and we see that this one is our single leg move. This is our inducement over here. Okay, and after sweeping this inducement, when the market will break and close below this structure, then this will be a valid break of structure, but the market didn't actually close below it. The market didn't close below it for the first time, and the second time as well, the market didn't close below it. Okay, this was just a swipe of liquidity, and the market pushed higher. After the market pushed higher here, this one is not a valid change of character either. Why? Because this low here is not yet confirmed. The market has not yet completely closed below this structure here, so this is not a valid change of character. So that means our bearish trend is still valid over here. Okay, so at the for the third attempt, the market has broken and completely closed below this structure. This is our structure here. And every time the market was swiping liquidity over here, our lower low is transferred from this one to the next one over here, and again transferred to the next one over here. And for now, the market has completely broken and closed below this structure. So this is our valid breakout structure over here. So after this breakout structure, then can wait for the market to mitigate our to take out our inducement and mitigate maybe an order block, then we can take our sell. Okay, so here we have the market has pushed almost to mitigate our inducement here, but failed to mitigate it. Okay, and you see that the market has dropped sharply over here without actually taking out our inducement here. Okay, our mistake was that we were not focused enough on this structure. Why? Because we could have taken this sell over here based on this single candle order block. You see that the market has swept this previous candle liquidity. The next one has closed below it, and you see that the market has actually mitigated this order block here, this single candle order block before dropping. Okay, so this could have been our valid entry over here. This could have been our valid entry over here. Okay, but we didn't spot this single candle order block before the market drop, so we have missed this beautiful trade opportunity. Okay, so for the coming weeks, if the market keep dropping and break close above below this structure here, then we will have a new structure over here, a new breakout structure over here, and then we have to wait for another swipe of inducement mitigation of order block before we can take the sell over here. Okay, so this is the structure we can have on gold. Okay,